So Amazon rolls up to the poker table and sits down with their mountain of chips, their big Monopoly amount of chips. They just grab it with both hands and they shove it to the center of the table. They say, I'm all in. That's exactly what they've done on AI today, where they just announced that they're going to be spending $200 billion on AI, which was a real shocker to Wall Street because they thought they were only going to spend $146 billion. In the stock, dropped 10% after hours. But here's the stat that should really scare you. Their free cash flow decreased by 78% in just 1 year, from $38 billion to just $11 billion. They're cash poor right now for a company. They're spending it faster than they can make it. Let's hop into what happened. On paper, this was a fantastic quarter for Amazon, and that is why this is so surprising. We got Q4 revenue, $213 billion, up 14% year over year, beat the estimates. AWS, $35.6 billion, which is up 24%, fastest growth in 13 quarters per Andy Jassy. And the full year report for 2025, $716.9 billion in revenue, $77.7 billion net income. That is huge. Slight miss on EPS, $1.95 versus $1.97 expected. So none of this caused the sell-off. What caused the sell-off was just one sentence from Andy Jassy. Andy Jassy gets on the earnings call and he drops this bomb, which yeets the stock down. He says, quote, "We expect to invest about $200 billion in capital expenditures across Amazon in 2026. And the stock cratered. By their own figures, they expected $131 billion. Wall Street consensus thought it might be $146 billion, a little higher than they're saying. Nothing too big, though. And then Amazon overshot on the real number by $54 billion. Oops. Q4 alone was about $38 billion in capex. And just to illustrate how effed up and crazy this is, that's $1 billion every 3 days. So what are they blowing it on? AI, chips, robotics, and low Earth orbit satellites. That's 4 different moonshots funded by one capex line. Here's where it gets real effed up, though. Since October, they have laid off about 30,000 employees, mostly Americans, and they've been scaling up their operation in India for cheaper labor. I have a great video on this from 2 weeks ago. Go check that out if you missed it. And the picture is becoming a lot clearer here. And you already knew this narrative because you're here on the channel. They are not laying off because of AI. AI is not replacing these jobs to a sufficient level of quality. They are kind of laying them off because of AI, but not in that way. They're laying them off because they need money to spend on AI data centers. And then they're rehiring these employees in India so they can get them for much cheaper. It is a keep alive game. This is not a long-term strategy for them. This is a keep alive game to cut spending on employees while moving them to India to get some less expense on employees over there. And then taking all that extra money, we're saying we're putting it all on red. We're going to invest all of this in AI infrastructure. That is the play. That is the play. So yes, I guess in a sense, AI is taking these jobs, but it's not actually replacing them by automating them. They just need the money to buy more compute for AI. As you know, Amazon is not doing this alone. Big tech is collectively planning to spend over $600 billion on AI infrastructure this year, and nobody can tell you who's buying the output or how this is even monetizable. Alphabet, which is Google, blowing $175 to $185 billion capex for 2026. Meta in the $115 to $135 billion range. Microsoft is already at a $90 billion annual run rate. If you want to see my video on how that got all effed up, that was posted earlier this week. Go check that out as well. So total hyperscaler capex projected to be $600 billion plus for 2026. That number is from credit sites, which is up 36% from 2025, just last year. The Goldman Sachs consensus is $527 billion, and that's rising every quarter. And you know, I like to put these numbers in scale. It's hard to visualize these massive billion-dollar amounts just out of nowhere. And so I have a couple of cool comparisons here for you. The percentage spending of this country's GDP on what we're spending on AI infrastructure now exceeds the Manhattan Project, the Apollo program, and the broadband buildout combined. And in a rare bit of really good reporting from Yahoo Finance, they ask the question that we should all be asking. They say, quote, "Is this spending being pulled by customer demand or pushed by competitive fear?" Certainly the latter in this case. Here's the bottom line. Amazon made $78 billion in profit last year. They are now about to spend $200 billion on AI infrastructure that will run models that nobody knows how to make money off of or monetize. And they are hoping the situation solves itself before they run out of business. Their free cash flow is collapsing while their capex accelerates. That is the math. That's not an opinion. That is a fact on paper. They are firing humans so that they can rehire them more cheaply in India and other parts of the world to save some money on employee expense. And they're taking that money and they're using it to build data centers. And why did the stock crater 10% then compared to similar news that came out from similar tech giants over the past few weeks, months, and the end of 2025? Well, it's because Wall Street is finally saying, where is my money? I have invested in this. It looks now like it's being driven by fear and competition more than the actual business sense that something will pay off here. And I want my money back before this goes up in flames. And like it or not, if you are holding a considerable amount of Amazon, you are now at the poker table. You are now all in. Whether you like it or not, you are now $200 billion into this, waiting to see, is somebody going to figure out this problem, or are we going to get a government bailout before shit hits the fan? I don't know. Your guess is as good as mine. Let me know what you think in the comments. If you want to follow the money on big tech, AI spending, chips, data center builds, make sure to subscribe to the channel. Also, in the description, my newsletter link there. A lot of you have been pressing for, I want your sources. I want an in-depth analysis. I want to know what to buy, how to evaluate these companies. That is going to be coming out soon. Be the first to get it. Sign up for that newsletter link in the description. Thank you for watching.